Welcome. Come on in. It's Thursday and it's happy hour. Home happy hour to be exact, so grab a drink and let's get started. Hi everybody. Today we're talking about how do I read a loan estimate. So I'm going to give you a little history lesson. There have been many iterations of this process, and every single time they've done it, they're trying to make it easier for you, the consumer, to figure out what's actually going on with your loan. It's actually really difficult. So what the government has gotten us down to is 3 pages to create a loan estimate that you can understand. So each section is broken down. There's the loan terms, your projected payment, and the costs at closing. The idea behind it is that you would take this information and be able to compare between lenders. There's a couple problems with this, just so that you know to be aware of. Every moment in time, interest rates are changing, and so if I get an evaluation from a lender today, and then I go back to the same lender tomorrow, this might change because the interest rate might change. So that's something to be aware of, and that's the first thing that I look at is, okay, are we looking at the same interest rate? If we are, then the thing that's going to vary are closing costs. And it lays out pretty clearly what those closing costs are. The tricky thing is closing costs are only an estimate. So when they line item everything out, one that you'll specifically see is title insurance and escrow fees. Because that's a third party, they're really just guessing what those costs are going to be. Most title companies charge about the same amount of money, but it's a cost that they can't control. And so that's another thing I look at, because sometimes between loan estimates, those costs will be different. And that's kind of something that you can't even pay attention to because it's not something lender has control over. Another big thing the lender doesn't have control over is your homeowner's insurance. They have to put the estimate on here, but it might change depending on what kind of homeowner's insurance you want. So it's another variable to look at that's something that the lender doesn't control. And so mostly I just take it out of the variable and look at the things that they can control so that you know what you're actually trying to compare. Because ultimately what you want to use this for is to compare and contrast between lenders and try and figure out who's going to give me the best deal on not just closing costs, but interest rate and terms of the loan. Another third-party fee that I haven't mentioned is mortgage insurance. So typically a lender is not a mortgage insurance company, and they go elsewhere. They go to a separate company and say, hey, mortgage insurance company, will you give me a quote on mortgage insurance? Sometimes those quotes can change dramatically and you wouldn't know about it until you get the closing disclosure, which is pretty much the same thing, your loan estimate, but in a finalized form. So I've seen mortgage insurance change dramatically from what they estimated to what it actually was. So it's something to pay attention to and look out for. In reality, mortgage insurance is its whole own topic. So maybe I'll do a video on it. Comment below if you're interested in what questions you might have about it. Loan estimates can be a big subject, so please comment or just reach out with any questions you have. I'm always happy to help. And of course, thanks for tuning in. Please like and subscribe our channel and tune in next week to our home happy hour. Cheers.